Hello traders, this is Nams. So in today's tutorial, we will be looking at market structure. Many times we are left behind by the market. Why? Because of a lot of people. We don't understand market structure. So in today's tutorial, we'll focus on market structure, how to read the market. Maybe you are a beginner, you are new to Forex. This is the video you have been expecting. So I'll use Euro USD as an example. First of all, let me just bring in something here. What is market structure? What is market structure? So let me just type something here. Copy and then I paste. Okay. So what is market structure? So we're talking about market structure, and I'm simply saying market structure is just the way price moves on the chart. And then the only thing we need to know is that price only does three things. Number one, it goes up. Number two, it goes down. Number three, it goes sideways. Understanding this helps you know who is in control, either sellers or buyers. Okay, so it's very important we know that we know what the market is simply doing. For example, if the market is going up, there are some things which you will see, of which I will be able to show you. So I'm simply saying we have types of markets. Okay, so number one, and then I give an example. Types of markets. Number one, we have uptrend, known as bullish market. So in this market condition, what are we expecting? Price is making higher highs and higher lows, meaning buyers are in control. Look for buy opportunities, not sales. So this is what it means. So in an uptrend, the market is saying it is creating highs, higher highs. So this is what it means. Here is our starting point. It goes up, it creates a high, which is a higher high, and then it needs to come down to create a higher low. So it will do this, it creates a higher low. Again, it will do this to create a high, a new high. It needs to come down to create a new low, and so on. So this is what it means that the market is in an uptrend. Okay, so let's see for another one. In another one, in a downtrend or in a bearish market, this is what you are to expect. Where's my tool? Okay, I bring it here. Okay, let me just pull it up and then I bring it here. So I'm simply saying the type of market number two is that in a bearish market or a downtrend, as you can call it, price is making lower lows and lower highs, meaning sellers are in control. Look for sell opportunities, not buys. So this is what it means. We have a high here, and then price comes to create a low, and then it comes to create a lower high, and then it comes to create a lower low, and then it comes to create a new lower high, and then it just continues like that. So this is what it means that we are in a bearish market. So now, apart from these two, one thing I would like you to know, to say this is the kind of markets you and I, or as a beginner trader, you should be focusing on. Why? Because if the market has a direction, it will be very easy for you and I to make money. So number three, the type of market which we have, I'm saying we have a ranging market. So what am I saying? A ranging market, or sideways, price is moving between support and resistance, meaning no clear control. Best for ranging trading or stay out as a beginner. So as a beginner trader, this type of market you are supposed to stay away. So an example, this is what it means. Price goes up, it comes down, it goes up, it comes down, it goes up, it comes down, just like this. So this is what it means to say price is moving between support and resistance. For instance, we have a resistance here. We have a resistance here, and then we have a support here. So if price moves from the support, when it reaches to the resistance, it bounces off, comes to the support, it bounces back to the just like that. So this is what it means. So I have something again for you. As a beginner, one thing you need to know is that market structure is the key. Market structure is the foundation of your trading journey. So no wonder I'm starting with market structure, because I don't want you to miss it out, so that at the end of the day, you find yourself maybe in situations where you don't know what to do, you don't know how to frame your directional bias. So that's the reason why I want to take this time to teach you about market structure and what you are supposed to expect. Yeah, and then from there, we are going to jump into the live market. So let me just bring in another one. Okay, so I'm simply saying to say market structure concept beginner levels. So as a beginner level, what are you expect to know? What you expect to know is this: the market creates swing highs and swing lows. Swing highs, price goes up, then come down. This is what it means. Price goes up and it comes down. So meaning it is creating swing points. It is creating swing points. So this is what it means. Price swing highs, price goes up and comes down. Swing lows, price goes down, then goes up. This helps you identify the trend. What does it mean? It helps you to know which direction the market is moving. For instance, this is what it means. Price moves up, it creates a point here, and then it comes down. After coming down, it comes to take out this point. Once it takes out or break this point, it needs to come down. And then when it comes down, it needs to go up. That's what it means. And then from there, you can now understand and know to say we are in a bullish market. So what do you expect in this kind of market you are expecting to buy? So when the price goes up, when it is here, you wait for it to come into a discount level, and then from there you buy. For instance, we are here, this is the point, and then this is the high, like this. This is the lowest point, this is the high point. If this is how we are starting. So price moves up, creates a high, and then it comes down to create a low. So what am I trying to say, or what does it mean? If price moves and then it is here, you are not supposed to buy, because it's just like a normal market. Everyone wants to buy when prices are lower. So when prices goes up, what do? You wait for a retracement or a pullback, and then once it comes and then it reaches into your discount level, that's where we can buy it. Okay, that's what it means. Let me give you another one. It is saying break of structure. Break of structure. What does it mean? When price breaks a previous high, like just what I'm from saying, a previous high or low breaks a higher high, equal bullish continuation. Breaks a lower low, equal bearish continuation. Traders use BOS to confirm trend direction, just like I have mentioned, to say if price breaks here, you know we are buying. And I normally tell my student to say we establish a bias if we are in an uptrend. If we see price breaking two structures, for instance the first one here and the second one here, which gives us a confirmation to say we are in a bullish market. So what do you expect? You expect price again. This is a premium. For instance, if I get my gun box, I put it like this. So it means to say here prices are expensive and here prices are not expensive. So what do you do? Everyone wants to buy at the cheaper price. So what do you expect? You expect something, you expect price to come down and then it comes and tapped into your discount levels and then it goes up. That's what you expect. So what I have just done, you can just flip the script and apply it to the bearish market. For instance, okay, let me just do it fast because I don't want to make this video to be so long. Something like this. It creates a lower high and then it breaks it. But breaking it, I mean this one, it comes back to create a lower high and then it's just continue just like that. So this is what it means. We are in a bearish market. Why? Because price has broken two structure points. So what do you expect in this kind of market? You expect a pullback. I get again my gun box, I put it here and then for instance I put it here. So what am I expecting? I'm expecting price to return into premium and then it drops. This is what I'm expecting. I'm not, yeah, something like this. This is what I'm expecting. Okay, so what have I taught you? I taught you to say in a bullish market, price is creating higher highs and higher lows. So now what I've just said, let us apply them on the real and live market. So I will remove all these drawings and then let's implement them. Okay, so this is a Euro USD. I'm using Euro USD because this is the most recommended pair for beginners. If you are just starting, this pair is for you. Okay, I'll start with the one I started with, which is the bullish market. How do you know? Like I have said, to say price is creating a series of higher highs and higher lows. For instance, I'll start from here. So when I start from here, this is our low. Price goes up, it creates a high, it comes down to create a low, and then we break the previous high. We break the previous high to create a new high. After creating a new high, we see a low, and then we see another high. So you notice to say price is creating a series of higher highs and lower lows, higher highs, lower lows, higher highs, lower lows, just like that. So as you can see, the market is heading to the upside. So this is what we call a bullish market. Let me show you a bearish market. Okay. Okay, I'll just start, yeah, something like this. And then this is what you expect. Price is creating a lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low, just like that. That's what it means. And then the last one, I told you about the ranging market. So what type of what does it look like on the real market? We have a low, we have a high, we have a low, we have a high, a low, a high, just like that. That's what it meant to say price is moving in sideways. As you can see, this is a sideways, and this kind of market, you and I, we are to stay away from it. But believe you me, price doesn't move like the way it seems. This is a textbook. This is a textbook. You'll find that in a textbook. But if you can see how it moves, it looks so complicated, of which in my next video, that's what will come and talk about it, market structure on an advanced level. So if you have come this far and you find this video to be useful and helpful, make sure you subscribe to this channel. Make sure you like the video, just to help this channel to grow to new heights. Let us build this community, and in here we trade using smart money concept. See you in my next video.